Hey, I'm Scott Cole from whentobuyandSellStocks.com. In this video, I wanted to just cover the difference between a good breakout and a lousy breakout. And I'm looking at this chart of 3D systems here. And many traders trade breakouts. Many trend-following traders will trade a breakout. And the idea behind trading a breakout is that you want to buy at a high price and then sell it later at a higher price. And that's the essence of a trend-following strategy. But you have to basically look for securities that are definitely showing a tendency to trend. Now, 3D Systems is definitely doing that, but over the course of the last 6 months or so, the trend has been very choppy to the upside. So it's been the kind of stock that's been frustrating to those traders who trade breakouts on daily charts. And I'm just going to point out the difference between what a good setup for a breakout is versus a bad setup. So this is a good one here from February to April. The stock made its high price there and then sold off a little bit, stayed above its 34-day moving average that I have there, and that's really not an important characteristic. I just want it to be obvious that the trend is still up with the short-term moving average above the longer-term moving average. But what I like is that the stock kind of meandered within this trading range before it tried to test the upside here in early April, and that test failed briefly. And then it sold off and actually traded at a couple-week low here just a few days later. Right after that, it proceeded to rally significantly and then broke out finally above this high price in February. And I like this kind of a setup because, first of all, the channel is relatively narrow. It was between about 21 and 25.50 or so. And then the other characteristic I like is that it sold off and made basically a short-term low here. It broke down below some support and then rallied right after that. Now, I wouldn't like it if this bar here had traded much lower, say down to $20 or below. That would have been too much to overcome and turn around and have a nice breakout that I felt I would feel comfortable trading. It stayed within this very narrow range, and that's why this low price here really wasn't that significant. So this was how I would define a pretty good kind of breakout setup. Unfortunately, even though it peaked up over $31, it sold off and didn't really offer a trend-following trader that follows that kind of a strategy much of a profit. Now, what happened here is it made this high the 1st of May and then sold right off and actually closed under its 34-day moving average here, and actually made over a 4 or 5 week low price there. And then from there, it went right back up and traded above that high price that first trading day of May. Now, I wouldn't have been comfortable with this breakout because there was so much price damage between this high and this low that it had to overcome. So from going to from this low to that high, the stock is basically going to run out of steam pretty quick and pretty easily once it gets up there. You're going to have a lot of traders that might have wished they had sold there, selling here after they missed the boat that first time. So basically there's stronger resistance there. And this band here compared to this band here, between this high and this low, here is much wider. So it's a wider and looser base, and it's just not a good one to trade. Now, again, this next breakout I wouldn't have been very comfortable with either because the trading range hasn't really narrowed much at all. Now what we've done is kind of gone and expanded the range to the upside before it pulled back significantly again. and then it retested the highs again. So basically this is turning into just a choppy stock where you're better off just buying a little bit of a pullback and then selling every time it rallies back up to there. So it turned into a very frustrating kind of stock for the trend following type of trader. Now I'm going to contrast this with pharmacyclics and show you what a more successful kind of a breakout trade is and the characteristics of that. So we can already see that we had a nice move up there in June basically, and let's just look at how the setup was. So we could see that the stock had been trending up and then really made a strong move here before it started to consolidate. Now if you were some kind of if you traded based on the Darvish box theory, you might have bought this high right here after this little congestion pattern there, and that would have been actually kind of a false breakout. After such a strong move, it's probably a better idea to see a little bit of a consolidation before trying to hop back into a stock, especially since it already had a couple other little box moves here in its uptrend over the last few months. So what it did then was it broke out here and then sold off, and then over the next few weeks proceeded to form a pretty narrow base, and that is exactly the kind of opportunity I look for, because on the weekly chart the weekly trend was still clearly to the upside. So I'll actually show that weekly chart. So you can see over here, this is the weekly chart, and the stock is clearly in an uptrend, and all it did was form a nice consolidation base here within a pretty narrow trading range. Now the tricky part was the day it broke out above this high, it actually pulled back and closed lower. So some people might look at that as kind of a key reversal day or whatever. And then the next day it actually traded lower, and in all honesty I had bought this stock and I came within about 5 cents of being stopped out. Fortunately, I don't really pay too much attention to the market during the day, and I prefer to wait until the evening or the next morning to update my trading decisions for the next day. So I didn't get shaken out here, and then the stock broke out again, and I held the position. It rallied up to here over $32, pulled back to 30, right back into support, and for some traders that would have been another opportunity to either enter on this little pullback or this little breakout here after this initial breakout. I think that's a good strategy here too. Either or, you could do that if you're a trend following trader. Then obviously the stock since then rallied significantly and all the way up to $60. Presently we're at about 53 and change, I believe, after today's action. Yes, 53.21. So this is more of the type of breakout that you want to look for here. Look for a flatter kind of a base within an uptrend, and look for some other factors such as some decent volume at some point during its previous rallies. Unusual volume, basically that signifies some sort of accumulation either by insiders or by some small institutions. This is not a stock that a larger institution is really going to own because it doesn't have enough liquidity. It only trades about 1 million shares a day at this point, and sometimes all the way down to 500,000 or so. But you can see during this rise that it got some institutional investors interested, and we have greater volume down here. But that kind of sums up this video as far as characteristics of good breakouts versus bad ones, and I hope that helped you out. And Check us out at whentobuyandSellStocks.com, and we hope to help you out.